Good morning, afternoon, maybe. What is up, everybody? It is Monday. Ready to roll? Hey, everybody's in the house. Is Santa coming to? There may be some presents under the tree, but it does look a little nasty today. All I will say is I'm starting to get a little bit excited. I don't know about you guys, but yes, it's not just been a choppy day. It's been like a choppy couple weeks. But I'll tell you what, the setup is getting better and better and better. And I know it feels weird to say that, but yeah, I mean, it's setting up better. Tomorrow, guys, is the big day. Tomorrow is the big day. And then we have some on Friday also. Santa, I mean, he might have gotten a flat tire. Santa might have gotten a flat tire. We'll see. But if you guys know the deal, did we hit 675 on SPY yet? On SPY? SPY 675. Maybe not. Not yet. I'm not even looking at the charts. I'll tell you that much. I've kind of looked at charts a little bit. Look at my group. The coil is getting tighter. Yes. Is there still hope for Bitcoin? Guys, what do you mean is there still hope for Bitcoin and crypto? It's all in consolidation. And I'm going to demystify some stuff. I'm watching, Santa has been eaten by the bears. Come on. I'm going to try today. This is probably going to be an important show. And I'm going to try and demystify a little bit. Because to me, maybe I'm weird. Maybe I'm wrong. But to me, this is pretty straightforward. And to me, I feel confident about what's going on, why things are going the way they are. What's up, guys? And I just want to explain what I see today in the charts a little bit. So I'm going to go slightly deeper into some of the economic stuff today. I don't know if we're going to have anybody join. I sent a note over to Evan. We'll see. BMR bag holder. So everything is going to plan. Santa did not get deported. We don't know. But we're going to talk about all this today. Everything's going to plan. If your plan was that we were just going to rocket ship to the up and to the right, well, that was never really the plan, actually. So if you guys are watching, following, whether it's on my channel here, welcome, by the way, or on Amit's channel, the subtle nuances that I kind of drop from time to time are kind of, I mean, they're a little important, but I can't just say straight this is what I'm expecting, this is what I'm not expecting, unless you're in our private group when my thoughts are coming out all the time. Yeah, for sure. You guys are going to get that. It's possible. And I like this one. This one is it. Santa's bags maybe just got a little too heavy. Just a little too heavy. You guys, I was extra nice this year. Look, the Santa Claus rally. Go to my Twitter, X, timeline, whatever. Forget about the Santa Claus rally for a minute. I'm gonna pull up our screen share here, and I did create a nice little thumbnail today. But the Santa Claus rally, this is the plan. Today, we're gonna unveil the plan. I watched him this morning for just a little bit, and dude, that guy, I don't think I saw him smile one time this morning. It is so ridiculous. Oh my God. My NVIDIA call was wrong. Actually, it wasn't. So if you go back, it's it didn't get all the way there. It was really close. But the call was, if you follow the clip, Does it hold? Probably not. We'll see though. Santa bags filled with Neo clouds. Yeah, I don't know. But today, we're going to go through this. Don't worry. Don't fret. The biggest thing this week is that we have NFP and CPI. So NFP is tomorrow, by the way. And this round of NFP data is delayed. We could also get some, revisions. I actually expect this most recent round of NFP data and CPI to be revised. So just know that, remember that we came off a massive amount of revisions, and I don't think that it's necessarily over. Please let Santa know about crypto. You guys, crypto is the most raw form of supply and demand out there. So, there's just there's quite a bit of, how would you say? That stuff can go wild. It's extremely violent. I expect some kind of pullback. As long as we can hold the most recent lows, we're fine. If not, even if crypto pulls back a little bit, it doesn't mean it's over. But the Q4 rally, if you will, has mostly happened, and hopefully the stock market isn't the same, where it's down from the lows and then slow rally. Although that was like a nearly 30% bounce on Ethereum from 2,600 to just under 3,500. Just under 35. That's a lot. That's a big bounce. So to expect it to pull back again should be expected. But the important stuff is coming. And CPI and NFP, these two data points, are going to come out this week. And they're based on those days' price action, which is this week, both of them this week. We're going to know. We're going to know where we're going. And it's going to be pretty, specific. The only thing I'll say is don't confuse this with it's that day's price action. Quite frankly, if the NFP day and or CPI days are very violent and they close on if they end up closing on the absolute highs and absolute lows for those days, honestly, I would inverse that. So if NFP is really bad, just look back to the last NFP day. Really bad day. Did it ever extend lower? No, it didn't. I ran some stats this weekend because we're revising this NFP script. So also, by the way, if you have the NFP indicator, don't worry, we're going to reach out to you guys soon. There was some TradingView issues with their team up with Lux, and so we're going to pull that in and just do that direct instead of going through Lux. So love Lux Algo, by the way, some of the best indicators out there. But TradingView decided to make it so that they couldn't. They weren't allowed to do the reselling of our specific stuff. So we'll have that out to you guys shortly, all revised, updated with the current NFP levels as well. When I was doing this update, I was like, you know what? I wanna get really in the weeds on this granularity of how accurate, because I know NFP stuff is stupid accurate. It's literally like the market hack. And when we ran the numbers, there are we can go back a little over 10 years, and a little bit over 10 years of data. It's about 250 NFPs that we could track, that are available to track. Did you guys know that day's price action is within 1 or 2% of the high or low for the month, nearly 90% of the time over the last 10 years? Over the last 10 years, that's like 250 plus NFPs. Over the last 250 NFPs, that day has marked the high or the low for the month. It was 88.7 something percent. There's not a better statistic out there. 88.31%. 88.31%, that tomorrow is going to mark the high or the low. And if it's not tomorrow, well, the next closest one is CPI. So it's going to be this week. That's what I can tell you. But anyways, I know you guys are all kind of like freaked out about it. Let's just get into this. So again, welcome to the channel. If you guys are new, make sure you subscribe, like the video. We're going to drop some stuff today, and we're going to hopefully demystify the markets just a little bit and show you how we're going to get, if we can get to the Santa Claus rally circa 2025. But before we do that, we got to get into a couple things. What we do here on Monday specifically is we go over what are the major headlines. This is all right. ETH for Peace got me on this one. Santa Claus rally is transitory. You got me on this one. That's golden. I think I'm gonna use that. But that's money right there. That's a money comment, dude. Props to you. I love that. But, you know, what do we need to do? Right now, it's hard. Like right now, in the face of the current market, things are like all over the place. I'll tell you what, as a swing trader, I don't like that I'm having to play day trader so often. This is not a swing trader's market. At least the last 2 or 3 weeks. You can get maybe 2, at most like 3 days stretched of like trending momentum, but then then it goes right back to where it came from. Also, it was like elevator up from the lows. We're kind of feeling like a little bit of elevator down, not the typical staircase up, elevator down. It's a little different this time, but what we have in front of us is what's important for the moment, right? And so here are major headlines I pulled really just like for the last 24 to 48 hours and then moving forward. But NVIDIA, if you didn't know, unveiling AI models for agents, boosting and some of this. Let me see if I can see this. Trading View. I believe NVIDIA was holding up. Let me pull this bad boy. Speaking of holding up, oh my goodness, Rivian and Tessie just bucking the trend. NVDA. Like NVIDIA holding up, right? Open AI models for agents, boosting AI automation tech. Why is NVIDIA holding up today? It's not getting demolished, right? So there's some good sentiment around NVIDIA right now. SpaceX IPO listing an $800 billion valuation. Looking to list at $421 per share, which has like absolutely influenced our Rocket Labs, our ASTS holdings, a lot of stuff in that space area. So this has been really that catalyst that's been moving Rocket Lab, ASTS, those type of the space stocks higher. Is that if SpaceX IPO is an $800 billion valuation, and these are the next closest things, really Rocket Lab. What does that mean for Rocket Lab's market cap? And so I think that was quite a bit of an influential catalyst for a name like Rocket Lab. Under the surface, we still have some really weird stuff like iRobot was kind of ripping all over the place, but now filing for Chapter 11 bankruptcy, facing restructure. Although I did see some of the headlines were like, oh, it's not going to be so bad, but they'll probably rebrand. There's at the very bottom of this, and someone says Pfizer back over 26. This is a big deal. Pfizer back over 26. If you're not looking underneath everything that's going on inside the mechanics of the market, they're very bullish sectors, and it's currently heavily around this biotech and healthcare boom. There are trials getting approved. Major FDA approvals. There's acquisitions going on. There's all kinds of stuff. Every day, I'm seeing multiple headlines of this biotech up 35%, that biotech up 45%, that biotech up 50%. The sector is hot right now. And that sector, that biotech sector, is about 20+% weight of the IWM. Or small cap area. The other piece is regional banks, which are also doing really well. So between these two things, biotech and regional banks, albeit that they're hot right now. So I don't know if you want to, this is not necessarily the day to press a bet. Just know that those two sectors represent about 50% together of IWM, the ETF. And because those are the two like hottest, strongest sectors right now or industries, IWM's significantly outperforming. In terms of diamonds, it's very much healthcare and financials. A little bit bigger buckets, but again, who's heavy in the Dow? Healthcare and financials. And these two areas doing pretty well. In the meantime, what does that mean for our mega cap stocks? It's not their moment to shine. That's what it means. It's just not their moment to shine. If you want some good headlines, like JP Morgan, I don't know, somebody can double check this, but starts $100 million Ethereum token fund. I mean, dude, do you guys remember when Jamie Dimon was like, no, I want nothing to do with crypto? Like it's a scam, basically. Like that's wild. And then, in the meantime, also we have Tesla completely bucking the trend. Tesla being Tesla, that's how Tesla rolls. But Model Y robotaxi spot in Austin is a lot about FSD. It's EV sales is kind of like bottomed, but everything's looking good. Tesla, when Tesla wants to steal the show, I'll just say this: nothing else can really move. Tesla steals the show. And Tesla steals the show. And it's like everybody else just stop, let Tessie do Tessie. And when she runs, I'll just say she really runs. And today, extremely interesting day, official breakout out of the massive consolidation, or nearly breakout. But Tessie's looking hot. Tessie's looking crazy strong. And again, you don't really see that in a recession type economy. You don't see that when things are all going to crap, right? Like you don't see this rotation into healthcare, biotech, regionals, or financials. None of that happens, right? There's still risk appetite in the market, and overall, this is extremely healthy. Tesla not even up 4%. Yeah, I mean, it's not. If this goes. Remember, what's Tesla's target? It was like 600 for March, maybe 690 because Elon looks at those numbers. But ever since that pay package was approved for Elon, I mean, this whole situation has been really good for Tesla. Now we have talks of SpaceX, like IPOing. Does Tesla own SpaceX? I don't know if Tesla owns any SpaceX or not. But we'll see. And then Bitmine, at least Tommy Lee coming out buying 102,000 Ethereum. That's going to have some kind of sense of a floor here. In the meantime, we have gold and all other precious metals hitting record highs, not just gold, silver. I don't know if you guys watch copper. Copper's doing the thing. I mean, there's good stuff happening in the market. You just got to know where to look. And absolutely, the stock market is not the economy. So to that end, let's go and talk about a couple of things that everybody's yammering about right now. I mean, the amount of Santa Claus rallies, posts, questions, all that kind of stuff is insane to me. But just to define this, right? Yes, the Santa Claus rally does exist, just so you guys know. On average, I think this used to be about 1.6% rally for December. But over the years, what's happened, this is the Santa Claus rally. What's happened is that it was really big, right? So like Santa Claus rally used to hit massive numbers. Like this is 6+% up here. And then we're trending somewhere around like 3%. And in recent years, it's gotten down. So what I will say about the Santa Claus rally is that the effect has more recently been slightly muted, although the setup here is kind of intriguing. So yes, the Santa Claus rally does exist. No, it's not a big thing. So I do want you guys to kind of taper those expectations. And if you're going to think in terms of the Santa Claus rally, it's better to define it. So what is it? It's a specific period of time, and it's specifically 12/26 through January 2nd. So it's like the last few days it's after Christmas. They think they call it like the unboxing day, into January. So it's the last 5 days of December and the first 2 days of January. It's a very small period of time. And more recently, it's provided about 1.3% over the last 70 years gain within those 5 days of trade, 5 days of December and first 2 days of the new year. It's not massive. It does have a probability roughly 80%. So in terms of what it is, that's what it is. So if you have expectations that it's going to be a 10% rally, that's wrong. It's just wrong. 1.3% is small. Is it a rally? It is. But you got to be cautious, and you got to be cautious about when, right? Because this is like, we're way over here on my screen, like way, way over here. If you think about when it's going to happen, December 20, I don't even know if it's a Wednesday. This is an old slide. In 2024, this was a 2.7. This is not even the bad one. The S&P fell 2.7%. I mean, that's a brutal Santa Claus rally. But what happened is that it did rally like right after it. But if you're too early for this setup, I mean, guys, it might go higher eventually. And depending on how you're trying to trade it, you might make money, you might not make money. But I think what you can read from this is that the dips are, from a seasonal perspective, are likely buyable. But to really define that, we want to dive in just a little bit more. I should have said a big deal. I mean, yeah. Santa isn't real. Santa's not real if you don't know how the stats work. If you know how it works, it's this little blip in the radar. It's been smaller and smaller every year for the last few years. And it doesn't actually start until you have money in the bank. So people are going to get Christmas presents. You're going to cash. What are you going to do with that cash? Think about that. Christmas Day. I mean, how many people get cash for presents? You get a lot of cash. There's also like end of year. I want to say deposits, but end of year, basically inflows for like 401ks, things like that. Payday, essentially. There's a lot of money that does start to rotate from here into the index. It's just what day of the day do they decide to jump in? You got to lean on the charts. So it's good to know that there is a potential Santa Claus rally. It's 79% of the time you get 1.33%. Does that mean we go down 4% between now and January 6th or 2nd? Just to go up 7%, that's very possible, almost probable. But at the end of the day, it washes out. So again, your timeline, it really matters. Your expectation really matters. That said, there is one other seasonal trend that's been, working out beautifully that we've been talking about, and that is this thing called the January effect. And if you don't know what the January effect is, this is very specific to the Russell 2000 and Russell 1000 indices. And if you can't tell on the screen, like, okay, so late November, you typically bottom. We have some kind of a pullback, which maybe we're going to get this pullback soon or now. And that pullback sets up for the most epic rally into March across the board. So how would you read this? What does this mean to you? it should mean two things just on this data alone. One, okay, cool. Well, the Santa Claus rally is there, but what does the data tell me? Data tells me that it's pretty muted, and if I have some wild expectations, I need to adjust those. That said, there is another piece here, something called the January effect, that is very real. Also, in terms of seasonal, real in terms of statistics and probabilities, seasonal trends, that is actually playing out as we speak. And all that tells me is that maybe I should be looking in different areas. There's a whole nother 2,000 or 1,000 stocks out there that are smaller in market cap. And, right now, that's where the strength is. And so maybe I should look into that area. And if I'm not familiar, I mean, I'm not a biotech trader, so picking biotech specifically is hard for me. We mentioned Pfizer. That is biotech, but it's at least a larger cap. It's still a good area. Plus, we've been seeing this massive retail resurgence, the mall trade. If you haven't caught that, the mall trade, good God, right? Like ANF is up how many percent over the last couple weeks? I mean, I sold some ANF and I'm like, oh, I sold way too early. Another high today for ANF, clocking, get this, over 80% gain in the last 20 days alone, less than 20 days. Abercrombie & Fitch is up over 80% in the last 20 days. I mean, good grief. My VF Corp, who didn't even, this wasn't even on earnings. I have VF Corp. I'm looking on a different screen. Over 45% in the last 20 days. I mean, Rivian, like, good night. This thing is like, there's some really good areas in the market. 60% in 40 days. They might be hot. But my point is that sometimes you just need to look in different buckets, different areas. And after big moves, multi-month, multi-year moves, sometimes it just means that we go sideways for a little bit. And when we look at the broader sector, technically, this is a presidential cycle. Presidential market cycle is a 4-year cycle. So 1, 2, 3, 4 years. So 4 years in general. We're literally like right here. Like we're right here. Can this go higher? I mean, yeah, it can, but potentially we do have a pullback that will typically hit late. This is September, October next year. And that might not be the bottom, because we probably already hit the bottom, but it's a dip that typically coincides with the prior pivot. So we have a lot of stuff to look forward to. Can this current market in terms of mega caps continue to run? Yes. But how much do we have to look forward to for that specifically right now? Well, I think it depends on a couple of things. And today, like we just talked about, this is our week ahead. So we have two massive economic data points this week. So one, non-farm payrolls. That's tomorrow. This is the biggest one. It's followed up almost instantly by the market's favorite economic data point, which is CPI, and that is the literal inflation reading of what has been. NFP is more forward-looking than CPI because what NFP does is it tells us how many jobs were taken on the last period. Now, again, this is data that's getting caught up, so I would kind of taper those expectations just a little bit. But in terms of reading the charts, these 2 days, this week, Tuesday and Thursday, are going to tell us, pretty much everything that we want to know, at least until January's NFP. And so in January, when we get the first Friday of the month NFP on January, that is probably the one that's really going to start to really move markets again. In the meantime, we do have some things to trade off of right now. And this week, not on Tuesday, it doesn't work that way. So it's not Tuesday, the day, Tuesday, and it's not Thursday, the day. What it is, it's really about Friday and beyond, right? Friday and beyond. How does the market digest these 2 days? Because again, we look back to last NFP, and it was a very violent move at the index level. It's a big move. We closed at the absolute lows of that day, and then we never looked back. If you had thought that the sky's falling on our last NFP report, you would have not like almost, you would have literally shorted the lows, sold the lows, toasted. So it's not about taking action on these days. We do not take action on these days. These are days to watch, like my Christmas colors there. These are days to watch how the market reacts the day after. So it's the day after on Thursday or Tuesday to Wednesday, and it's the day after Thursday to Friday, and all the days after that. But what's true, and you could go back, maybe watch some trainings. I might not have our trainings listed, but I'll just tell you right now, is that 88.31% of the time, this day is going to mark the high or the low for the foreseeable future until we have another NFP report. And then we have another NFP report. We'll get January. It's really bad. January NFP. So we'll get January NFP, and then but from here tomorrow to January NFP, that's going to have a very clearly defined trend, and we'll know exactly how to trade it, and it will be with crystal clarity. And we'll even have supplemental data from here, from Thursday CPI number. So everything around this is just kind of nonsense and noise. What these really do is they affect the market's expectation from a Fed perspective, Fed policy. This is just a screenshot from the FedWatch Tool. And this is like where the market expects us to land in terms of interest rates. So I took a screenshot of this morning. Tomorrow, what I want you to do is watch how these things change. Right now, we have a 75% probability that nothing's going to change in January. So January 28th, that's the next FOMC date. That's the next date that the Fed is going to announce or update its interest rate policy, at least for the interest rate that they control. But what's really important here is not just that, but it's this area. So right now, there's nothing priced into the market until maybe April. And even then, it's like 40% here, 35% here. I mean, the market's not really expecting anything. The market's expecting two rate cuts throughout the year, right? They're expecting one sometime between March and July, and then a second one sometime before the end of the year. This is a little bit far out. Nobody knows when. This is only 30%, but it's two. The market's only expecting two rate cuts for all of 2026. I mean, it's not a lot of rate cuts, but we have to look at why. Why is that happening? What's going on? And we just got the dot plot here. So I'm gonna dive in a little bit deeper than we normally do. And what I'm going to talk about today is maybe slightly different than you're used to. And I don't know if people are necessarily familiar with the economic cycles. Are you guys familiar with economic cycles in general? So there are 4 general cycles. Let's see this. Here you go. 4 general cycles. Inflation. Oh, you know what? I have this. There. 4 general cycles. So Goldilocks, deflation, there's disinflation, there's deflation, there's inflation or reflation, we'll talk about this right now. And then there's something called stagflation. Well, we know that we're not going into stagflation. That's not happening. What the Fed just announced was that we're actually going to be going into a Goldilocks environment, which the definition of Goldilocks is 2% inflation, 2% growth, and stable, what's the word? and stable unemployment. So I posted something the other day, and this is the actual dot plot from not the dot plot, but the forecast. So Federal Reserve forecast projected appropriate monetary policy. Here, this is from their actual website, like on the last December, on the last FOMC. And what you're looking at here is that from an annualized perspective, yes, they're saying, hey, look, we're going to go from 1.7 to 2.3. That's good, right? This is GDP. So the whole market revolves around, if you're not familiar, the whole market, valuations, multiple compression, multiple expansion, all of that stuff revolves around this relationship between interest rates, between inflation and growth. It's not about one or the other, but it is about the relationship between like spending and growth. Spending is called PCE, which is different than CPI, and growth is GDP. So it's about this relationship. So over here, right, 1.7 GDP, but we have very high spending. That means that inflation's high. So when spending's high, inflation goes high. We're coming off of an area where, look, we were spending a lot. We had low GDP, but then we went higher. GDP went higher. So this went into growth. That's good. And everybody's looking at this like, okay, well, where are we right now? Well, the problem is that 2% growth, 2% inflation, and unemployment, by the way, super stable at about 4%. This is, even if I include this is very stable, going better, getting better, and stabilizing. This right here, this is literally right there, the definition of Goldilocks, like to a T. The problem is that what we're coming off of, the monthly data, we're coming off of an area where we were, this is GDP also. This is monthly GDP. What we were just looking at was annual GDP. We were coming off low GDP where we were going down and inflation was coming higher or like going up. And then all of a sudden this last month or so, we had a massive spike, right? Massive spike in GDP, 3.8%. That's high. That's good growth. And at the same time that this just happened, what happened to inflation? It stabilized. Everybody thought that inflation was going to explode because of tariffs, this, that, and the other. Did that happen? No, it actually didn't happen. But where we are, we're here, and the Fed is saying that we're going to go back down to 2. We're going to go back down to 2. So this process of stabilizing, we go 3.8, then we're looking at a 2 box right in here, and then another 2, right, and then another 2, like getting to Goldilocks and staying there, staying right in that general 2% area. That's good, but to get there, guys, we have to pull back a little bit, and this whole thing is super normal. So that, I'm pretty positive what we're looking at. And so when we talk about these things, again, we're talking about general economic cycles and monetary states. And so this is a piece that we don't normally do on this Monday kind of show, but I think that today it's important for people to understand that that there are multiple stages of the economy, there are multiple stages of the market, and based on the Fed's expectation, based on what the market expects the Fed to do, we can be in different things. So there's typically inflation, there's typically deflation, there's Goldilocks, and there's something called stagflation. Now, these are the four, 1, 2, 3, 4, that everybody talks about, right? Everybody talks about these four. The truth is, and these are the four, 1, 2, 3, 4. In this scenario, look, Goldilocks, reflation, disinflation, this is equities. Equities do really good. Equities do the absolute best in a Goldilocks environment. So this is bullish that we're going to get there. When we just came off of that growth perspective, what we just came off of, this monthly piece right here, when we have a bout of growth like that, this right here, that has a word. And the name of that like cycle is reflationary. It's not inflationary. There's a difference between inflation and reflation, but that is this. So we're going to go from here essentially to here. But in order to get there, we actually have to go through disinflation first. So this is the thing I want to change, right? Expectations. We have to go here first, and then we land here. It's pretty straightforward. So in that scenario, this is why I'm saying it's very simple to me. What does good, right? Commodities do good, right? Gold REITs do good. U.S. Treasuries do good for a time. This is a transition phase. It's not deflation. I'm not talking about deflation. Deflation and disinflation are two completely different things. Inflation and reflation are also two completely different things. We're going to talk about that. But we're just making this transition from here to there. Is this bad? It's not bad. It's not bad, but it's a moment in time that you should probably taper your expectations. There are other things that need to go back up, right? So like T-bills, short-term rates, things like that. Treasuries were really bad. Now it might be the time to say, okay, well, these guys will have a little catch-up trade. And then what? Then they're going to go down, by the way. It's not going to be a great trade. It's going to be a trade, right? Over here, some of these things, gold was totally out of, like, we might have been going from stagflation if that area, but either way, we'll go here and then gold ends up being a sell if we are going into a Goldilocks scenario. So we'll take a look at that trade also. But let's go ahead and move forward here. The idea is that in this cycle, one, like inflation, deflation, stagflation, and Goldilocks, look, we're heading here. But and then there's a balance. So see this little wave in the middle? This little wave in the middle is like, all right, disinflation is where growth slows slightly and interest rates decline. It's not the same as deflation. It's not deflation. Deflation is like severe contraction, falling prices, and negative inflation. We're not talking about that. We're talking about the inflation rate, the rate of which inflation is rising to slow down. That's exactly what we're seeing, right? So this does not equal deflation. I want to be crystal clear. This is negative. That's negative. This is negative. We're not doing that. What we're doing, in my mind, is that we're coming up off this here. Then we have a little dip that immediately turns back into reflation. and then we land at this Goldilocks one more time, which, by the way, Goldilocks is the center happy medium balance. So we're going to go 1, 2, 3, and then we land at Goldilocks. And quite literally, that is what the Fed just laid out. Literally just laid that out. So what does this look like from where we are today, right? Today, based on what we just saw a reflationary pulse in GDP. That showed up at a 3.8% GDP coming off of 0.6 monthly. So this is monthly. The Fed is saying that we're going to land at 2% inflation. But what this means is some kind of sideways price action, which is exactly, and I mean exactly, what the market is showing you right now. We've gone nowhere. Sideways price action for just a little bit, I think till January. And they're going to land at 2% inflation really right now, right? So this is not prices, but we're just in the middle of this little pullback right here. And so this is going to come down to PCE, which is the median projection, to come down. And we're going to see that this week on NFP and CPI. NFP and CPI. NFP specifically is going to give us the best forecast into what PCE will be moving forward, because what is NFP? NFP is how many jobs were taken in the economy over the last period. And if the logic of the stock market is that if more jobs were taken, then more people have money to spend. And if they have more money to spend, they would typically they will typically spend it. And that shows up later in this PCE data point, which we'll get later on. All to say that this is the definition of a soft landing. Literally, definition of a soft landing, and it's just a very small blip in the radar that typically shows up as sideways price action, because stocks go three ways. They don't go two. It's not always up and down. It's sideways price action. That is a small disinflationary path to get to Goldilocks, which is right around the corner. So I'm pretty optimistic. I don't know about you guys. I don't think that the sky's falling. I like this. I think that it's important to recognize where we are and what we're coming off of. And the biggest thing is that we're coming off of a monthly negative 0.6 GDP that went straight into reflationary pulse, which is really good for the market. But now we're going to pull it back just a little bit, and we're going to land at Goldilocks, 2%. By like January, which is like next month. So to me, Bible dips. I like this. I like it as an opportunity. To me, it's an opportunity. Do we always get a lesson? No. No, we do not always get a lesson in economics, but you will get this stuff in School of Gains, which will be releasing hopefully this month. And tying it into price action even more. So I can only give you guys a little bit of this today. So hopefully this helped. Was this helpful? I really hope it was helpful. But all of this was a very long-winded way to say we always look for NFP. And this is what NFP is, the most important data point of the month, every month that we get it. And it's NFP it's not the end goal, but it's the most forward-looking data point that we have in the market. And it marks the high or the low of the month 88.31% of the time. You will not find a better statistic out in the market, period. This is a market hack that I think I'm the only one that has ever put this together, but I've run the numbers to exhaustion. And 88.31% is, I've never seen a better statistic than that in terms of like hard statistics. But taper expectations. If your expectation was that we were going to grow at 3.8% GDP the whole time, like, come on, it's not happening. And by the way, if we did, that would not be healthy. So this whole scenario, I like it. I like it. Are there like, rapids that we have to get through? Yeah, for sure. Is it going to be super fun to trade? No, it's probably not, because it's sideways, right? It's boring as all heck. Now, if we know how to navigate these waters, I mean, the January effect, specific timing in the markets, these statistics, probabilities, they give us the edge. When to press the gas, when to pump the brakes. That's what's important if you're going to be a trader. Otherwise, as an investor, no, we're heading to Goldilocks, baby. Like, that's it. And we're going to get there real soon. And so all this chop in between ain't nothing. So anyways, that's what I had to say. That's my rant today. I think that we should check in with our other friend to see if she has any like interest or has any, let's say, perspective on what we might be getting. And you know what? I'm down if you guys are down, but I think that we should check in with Miss Cleo and see what she has to say this week. So let's go ahead and get to that. We made it. We're past the learning. I hope you guys like it. Now everybody feels better. Wild to me how Miss Cleo sees the same thing. First of all, this is comedic relief, if you will. This is the T in TA, which obviously stands for tarot, not technicals. But this is a forecast, right? It's not meant to be serious. It's not meant to be, I don't know, religious or any of that kind of stuff. No, but she's widely accurate sometimes. So we get a theme card to start the week, right? So we get a theme card here. This is the Ace of Cups. I'm pretty sure that this theme card is good. Do I have a pink color? I do. Pink. So I'm pretty sure that the Ace of Cups is a good cup. This looks like our cup is like overflowing. So I'm happy about that. That's the theme card for the week. But I mean, oddly enough, the week starts out, you get Monday, Tuesday, Wednesday, Thursday, Friday with like, I mean, this is not a good look, but this is, I don't know what you call this. This is the 10 of swords. I don't know if she's calling it or what. I don't know what's going on here, but this is an ugly card. It's probably not the worst card, but it's not a pretty card. Looks like we're dead. All is lost. Then tomorrow we have NFP. We get the King of Swords. I mean, it starts to look better like right away. I don't know. Tomorrow we get the King of Swords. Page of Wands. All right. Well, and this is CPI day. So I'm just saying, if this is CPI, 7 of Cups, we go from looking really bad to looking like really good. At least in Miss Cleo's forecast, within 72 hours, right? 24, 48, 72 hours. So if y'all could just chill for like 72 hours, then Miss Cleo says things are going to be on the up and up. I don't know if she's right. I don't know if she's wrong. I don't know nothing about this, but I do know that people like to watch this stuff. And oddly, she nails it quite a bit. So maybe you guys can ping a Mitt, give him a little screenshot of Miss Cleo, and it's all about Thursday, CPI day, and the transition of tomorrow. So NFP, and then we have CPI. CPI starts here, CPI. So between these 2 days, 1, 2, we go from looking basically dead to like happy, shining star. The star. Let's see if I can draw a star here. That's not bad. It's not great, but she's looking pretty happy. Anyways, that's what we have. I have no idea what her write-up says, but she does give us a write-up. So let's go ahead and read that. So the theme card today. Oh, dude, full port margin. Stop that. The theme card for the week, Ace of Cups. So 9 to Ace could support continuation, but I think that's more likely to signal a redirect and start of something new. I like that. We're definitely starting something new. We're definitely starting something new from a data point perspective. History supports this, but it rarely results in a clean week. Fair enough. We're likely to see multiple up and down days, just enough to keep you guessing. Price action will be less impulsive and instead slow, steady, and difficult to chase. That doesn't mean we won't see a trend. There is a high chance of multiple trend days this week. We'll show you how to navigate this. I hear an alarm in the background, so hopefully that doesn't get too distracting. Let me see if I could text my buddy. If he can turn the alarm off right now. Okay. So Monday, this card is today. Doesn't bode well for most traders. It suggests a final death. Hey, final death, that's good. I know this. All right, so final death sounds good. Being stabbed in the back, having not seen it coming. I mean, did you not see it coming? I don't know. The good news is that this results in rebirth. There it is, in rebirth, but the impact today could be, what? What? The impact today could be monumental? What? All right. A mean reversion day, Friday was red, sets up another day or two in the same direction. Continuation brings a few days in the opposite direction. Action under a swords card is usually trappy, choppy. I like this. Trappy, choppy, and difficult to trade unless you fade it. Trend is possible, though, so chase it if you see it at the end. Wait for the end. Tomorrow, NFP day, the king. The king shows up with his sword for NFP day tomorrow. The king of swords. 10 to king is pretty obvious most of the time. As I said above, mean reversion brings follow on. So green day Monday means light green Tuesday. It also has a positive bias and loves to trend. This implies that there's a high chance of a full retracement. I mean, I hope it's not. I would like to see a red NFP day that I can just buy at the close. That would be just so picture perfect. It would be just like last time. But if we had continuation on Monday, then today is probably near flat. All right. Tuesday near flat. I'm good with that. And that sets the trend. Tuesday's high or low. Wednesday is the digestion day. Probably nothing. Let's see what she says. Typically, pages bring new adventures, but this page is atypical and carries a continuation bias, which is atypical. He doesn't trend, but he can finish 50% from the open. I mean, plus or minus 0.5% from the open. That's kind of trendy. But it's by the lows on Tuesday. If you didn't hear it, it's by the lows on Tuesday. That's tomorrow. This is the best case for momentum traders. The worst case is really a boring day that goes nowhere. Cool, fine. Thursday, 7 of Cups. This card represents, dirty. I was feeling like it was so good. Really? I was looking forward to this whole thing, and she does me so dirty like this. I'm upset now. Represents illusory gains. It almost always mean reverts fine. When it doesn't, it either starts with a morning trend that fades to zero or closes flat enough to stall any active trend. That's also typical CPI. So CPI reaction, first of all, Rivi is booming. That thing's exploding. Do not sell this Rivian. When it doesn't, it either starts with a morning trend that fades to zero or closes flat enough to stall any active trend. All right, so knee-jerk reaction to the CPI data point Thursday, fades that, then we see, then boom. Then the switches are flipped and we will have a clean trend from Thursday's close moving forward. I would be leery of holding any long-term positions for a full day, and I would be very cautious with short-term trades at Wednesday's close. Okay. Friday is the Empress. This card brings us back to a guarded state. She was starting off so good, and then it looked so good, and then she hits me with this illusionary gains card on Thursday. Miss Cleo, I might fade Miss Cleo this week. Whatever. We'll see. Where we'll spend time consolidating rather than making plans for taking action. It has a negative bias, and is more than capable of trending. But the only time it trended positively was after a huge bull rally the day before. I'm going to keep that in mind and say that this is where Miss Cleo kind of does her little hold up. If there was a huge bull rally, which I think is what she's saying anyways, Thursday. This is where Miss Cleo says, I think, but I don't know. But anyways, I think we might have a big bull rally Thursday after setting the trend on Tuesday, which will probably be the low. And then Thursday, we may be a little bit of a pullback and then possible continuation. That is best case scenario. But my guess is most traders are done for the week by Thursday. Speaking of done for the week, we're going to enter into a low volume environment. We're already in a low volume environment. I would expect that volume to continue to drift down. And you guys, if you're new to trading, low volume environments tend to have low volume environments carry the potential for outsized volatility, outsized moves, because if the buyers just keep stepping in, there's not always a lot of sellers around to counteract, or vice versa. If there's a lot of selling that happens, then there's not necessarily a lot of buyers to step in and save it. But that's low volume environments, and this could be that. Liquidity is lacking on Friday. Fine. It's probably best to take the day off. I'm not taking the day off, Miss Cleo. Do you. But recap, there's a lot of energy this week and that is capable of bringing series of trends. There's a bit of an if this, then that thing going on. I mean, always. So be prepared with both plan A and plan B. She doesn't know anything, but she thinks that it could be choppy, and wild. So I like that. Anyways, there you have it. So I don't know if my rant today about how everything kind of blends together, what the scenario is that I think that we might be in is, and if that helps you. I don't know if that helps you or not, but I will tell you that the charts will give me a better idea, and I'm going to adjust this, and I felt the need, regardless of whether or not you liked it or cared, I felt the need to explain at least my thoughts at the moment. So what I'm going to do right now is I'm going to flip this to a 30-minute time frame chart. If you don't know, 680 right here has been support. Just about 680. That is another economic data point. This box right here, 675, 675.56. This is that last NFP that we got right here. And I think it's super important to show you exactly what I mean by this is that it might not be like the absolute precise bottom because we did get a little bit lower. That's not even within the New York trading session, but in terms of this NFP, nearly 90%, there's nothing that you're going to find ever in the wild that's more accurate than this. 90% of the time, it's going to mark the high or the low for that period of time and defines the trend. Now, if you were just looking at that one NFP day. And I'll just show you what this looked like. I mean, this was the day that we got our NFP. And I mean, dude, if I pull this forward, as this day went on, like this was an ugly day. We literally closed like at the lows. I mean, this is the close. We started good. We got the data. It was all good in the pre-market, and then just instant sell-off, by the way. But that doesn't matter. What matters is how the market digests this day. And so I'm saying this again. I don't want everybody to get their, for lack of a better term, panties in a bunch on Tuesday, tomorrow, because it's not, because tomorrow's price action does not matter. It's a day that we traders have to show up, right? But it's not about that day's price action. If you looked at Tuesday and you thought, oh my God, we just dropped 25 points from high to low. I mean, that's massive, first of all. I mean, that's a big one, right? That is a 3.5%. That is double the size of the Santa Claus rally to come. In a single trading session, you would have looked at this in one foul swoop and said, this is death and destruction to come. If you thought that this day intraday mattered. And I'm telling you now, it does not, right? And if it looks like this, almost 90% of the time, also, if you went to continue that short trade, you would have gotten your face ripped off. If you went home shorts on this day, right here, you would be very sad. And it's not once in a while, it's every time that this day looks like this. A big day like that, honestly, it's like instant reversal. Instant reversal, by the way, means that we will typically move up at least 50% of this range. So that's about the halfway mark. I'm just eyeing it somewhere in here, somewhere right in here. That's the 50% mark. Just swag it. Draw a line. We should at least bounce there. And then at that halfway point, if we can continue higher, you know what? 90% of the time, this day marks the high or the low for the month. Guess what? Guess what, boys and girls? This was the low. That was the low. And any point in this whatever, that is the low. And it will stay the low. Period. End of story. So when you hear me going on streams saying the low is in, the low is in, the low is in, it wasn't like a guess. Like I have data, right? And because we never, after like once, tested this area. And so, the next morning, guess what? I mean, that's what happened, right? So instantly, low is in. I'm just playing this forward. There's your 50% mark, little bit of pullback. Now, low is in, boys and girls, right? We're going to at least test the high. You're going to test the high. And if we don't ever come back below 50%, no. The low is in, locked and loaded, and you're just up and to the right. And that's exactly what happened. When I talk about digestion, it's this point in time. This was that day. So I'm getting a little hyped up right now. Is that when you have a full open and close, so you opened above that high, 675, and you closed above that high. What we're looking for is 2, maybe 3 days of trading fully above this area to really solidify that we're going to be up and to the right from here. But at this point, look, the probability that we have locked the lows was nearly 90%. That is the statistic of this data point, that 90% of the time is going to be the low. So what does that mean moving forward? Is that means that any pullback and retest of this 675 is going to be very bullish. So screenshot this, whatever you need to do, 675 spot 56. That is the day, that is the point, that is the moment in time that this became a bullish situation. I mean bullish, where when I say bullish, I'm like, nobody should be thinking puts bullish. We're just going up bullish. Now, if at any point in time we retest this and this level holds, guess what? That's a buy. It's just to buy. Period. End of story. So we continued on going up and to the right. We did have some prior NFP data, right? And here we are, right? And so this, sorry, I said NFP. We had ADP. So while the market was shut down, what we had to go off of was ADP, something called ADP. So it's not NFP. It's a private payrolls number, but that number sits at $680.85. Now, as you're watching this play forward, where are we? We're holding this box. So this, I just showed you that was the low, right? That one marked the low. This one right here, this is not NFP, this is ADP, but in the absence of NFP, we were operating mostly off NFP. And this is how it works, right? So this is your range from that day. You get the market data in and, it's 672 at the lows, 672 to 680 for that day's range. This is ADP. It's not NFP, but it's what we were kind of operating off. A little bit choppier. But this is going to give me like a pretty small overlay, a little pocket that sits right in here, just above what is called fair value, which is this prior this prior like volume node. So from now we're back into technical land, right? Not so much into fundamental land. So this is the next fair value, about 670. So slightly below 675. This is my bounce target to go long, right in here. So in this green box, that's what I'm looking for, right? If we get it. For right now, we're in that, going up off of reflation, going down into slight disinflation, right? And then we're going to land at Goldilocks. So ideally, once we get into Goldilocks, there we are. And so this little arrow pathing, whatever, that I just kind of outlined is what I'm looking for. It's what I've been looking for. It's what I've talked about for a month now, is that 675 retest. It can be a small breach into, but that's what I'm looking for. Also, oddly enough, this is that prevailing downtrend, this red line here. Look at this is breakout, come back. What is that? That's a fracking beautiful retest. I mean, it doesn't get any better than that. It just doesn't, right? This white line right here is the 20-day simple moving average. This blue line right here is the 50-day simple moving average. I got a lot of confluence here, guys. I mean, like a lot of confluence. Now, when we get there, it's important to watch to see what happens to price action. But this is what I'm saying. Like, it's not a good place to press my long bets. For right now, this looks like it can come in. The one caveat we'll say is that as we move forward, tomorrow we're going to get new levels. And the way it works, if you didn't catch it, right, you mark the high and the low of that day from the moment that the market receives the data. So it's about 30 minutes before the New York session open through the end of the New York session close. That's how that box is formed. And whatever that day is, that's going to define the trend, just like this has. And my gut is maybe that box looks a little bit like this, but whatever that is, the day of non-farm payrolls, and CPI is similar, but doesn't have the strong statistics to back it up. The day of non-farm payrolls, I mean, it can look violent. And I don't want to step in the way of any bears that are like feasting on that day. Like if it's all the way down here, then that's what it is, right? But whatever that low is, like, that's an even better buy point. So I'll be happy with this. I'll be happy with anything in between. But at the end of the day, it's Tuesday's low. That's likely gonna mark the low. Look, the broad trend is up and to the right. I just don't have any reason. Just because the other thing is here is that just because we might be going sideways for the meantime, and this, I mean, definitively this is sideways, right? We've just gone sideways. Just because I'm going sideways, it doesn't mean that, broadly speaking, I like try to buck this trend right away, because the long-term trend is higher. So like, what is this little blip in the radar that we're talking about right now? It's just that. It's a tiny blip in the radar. Now that we kind of understand the economic situation, or the market cycle, if you will, that we are in, it kind of gives me a better idea of what to expect from specific industries and specific sectors. And again, this whole thesis supports that January effect of a broadening market where mega caps and large caps maybe just go sideways. They don't even have to go down, but they're probably not going to be super bullish, while the rest of the market catches up to wherever it was that we're going. And as long as we can hold these levels, which is the biggest thing, whatever that is, then, and only then, can we say, all right, well, look, we're good to go. But if we can hold those levels, we're happy campers. And we're going to know without a shadow of a doubt what those levels are, which is what makes this situation so cool to me, because my God, it's been so long since I've had real reliable data in the market that I can like legitimately lean on. So yeah, I'm a little excited to have some like legitimate data coming in the next day or two. So I'm happy about that. That's where we are. We're a little bit overheated. Don't want to press the bet. Not today, but you wait and you see, and it's going to tell us very, very soon. So there you are. And if we lock the lows on Tuesday and we continue on through Thursday or CPI, guess what? I mean, very likely for that to be it. Period. All right, so similar thing here. So this was prior ADP session high. So Qs could not get through it. We are actually retesting now on QQQ. So this works the same. It's built for the indices. We're actually retesting right now that high of NFP. So here's the big caveat. If we can't, let's say tomorrow, we should be able to bounce around here. I think we should be able to bounce around here. This is likely lows. I want to see this follow through for the Qs, for the mega caps, because we're just coming out of this rotation. And some of the things that are down from a large cap perspective is just about, this whole thing is about multiple expansion and multiple contraction. If the multiples contract a little too much, well, it's too discounted and we got to go back to equilibrium, which might be long Amazon, which is what I'm seeing a lot of you guys ask for. So I don't like that idea. I mean, I don't hate that idea. I like that idea. I'm still long Amazon. I love where we are. Today, on the Qs, look, this is like literally the dip that I was looking for on SPY. So what am I going to do when it's sitting here staring at me in my face? I mean, it's going to be pretty obvious, right? So 611, look, is a hard line in the sand right now. Is that if tomorrow we're below our lows of today, this is from a day-to-day perspective, we're going to go probably straight back to the lows. So the Qs is telling me this, QQQ, is that if tomorrow we cannot hold like today's low, it's probably going to set up to be a pretty violent move to the downside, which is why my message has been tomorrow's close. Whatever tomorrow's low, or I mean, I'm thinking if tomorrow's ugly, it'll probably close on the lows. So it'll probably be the low of tomorrow. It might be 596. It could be all the way back down to 581s. But at that point, I'm a buyer. And the lower that we go, I'm a bigger buyer. So if you don't have cash, sorry. But right now, for all intents and purposes, first of all, the lows are in here. The only thing that can change this as being locked in as the low is tomorrow's data point and how the market digests that. So the only way that that is not the low from here moving forward is that if tomorrow is deeper and we can't get above it. So I have like 72 hours for the market to tell me how far we're going up and to the right, most likely. But I don't need to jump in just yet. I can if I wanted to, but tomorrow, whatever the low is, that's my gut. It's my gut, guys. So I'll get off my high horse for just a little bit. In the meantime, we're still watching the dollar. Look, the dollar's come back in quite a bit. This is super interesting. I think that the dollar pulling back can give me a little bit of a red day on tomorrow, on like NFP or CPI. But look, if this level, the euro has been really strong too, by the way. So this is bullish, actually, for stocks, and also that move here is what we're seeing a lot of in the commodity sector. So as we kind of bounce and level off on the Dixie, I would think that gold probably tends to stabilize. You just hit the highs. I'm seeing a little bit of divergence, so I don't know that from an oscillator perspective that this is ready to completely explode in your face. Maybe a little bit of a pullback here, something like this, and then continue on. But I think this is more sideways right now than not. Yeah. So 385s, give or take, but just in this general box is where value tends to be. Probably sideways action. Ethereum and the crypto cohort. Okay. Hold on. That looks pretty bullish. 1 second. If I measure this here to here. Okay. Did anybody buy BMNR today? First of all, 35 on BMNR was like at least where it should go to. 33s, I haven't looked at it, is where I was thinking that the pullback could be. But that's what I'm saying. We should have bought them. It's probably it. I should probably go long Qs, like probably, and likely crypto, because this pullback is as clean of a technical pullback as, I mean, talk about acting right. Good night. I mean, that's nearly to the penny accuracy. 2,900 is the golden pullback. And look, I know there's not a lot of fundamentals behind crypto. I mean, there's enough, but crypto is a very technically driven asset because it is the raw reflection of supply and demand. And so it absolutely moves on technicals more so than anything else. And that's a perfect pullback. I mean, that's perfect. So 2,900, whatever that 28.96. Oh man. I'm getting really interested here. So what this means is that we should at least see over 3K in the next 24 hours. We should see $3,035.15. That's all this is telling me. So we should at least get to $3,035.15 in the next few hours session. If we can hold above that 30 like 3,000 level, 3,035, that's the big deal. That's a big deal because what I'm looking at is just a basic bounce. This can easily pull right back here and then do it again, right? I just don't. So it's a basic bounce. I just don't want to see it lose 29 because if we're losing 29, well, in that case, we're probably going to my 21s. So again, this is the spot. This is like Meta 595. I don't think that this is explosion time, but that's the pullback. If you didn't catch this one, That's the pullback. So here, I'd say 28.50. 28.50 would be like, it could still pull back and do whatever. But look, we should bounce. We should bounce a couple $100 from here. And then if we could hold that bounce, that's what really matters. Sell puts for a very short period of time. Ethereum's it's not in the rip your face off mode either. This is very much in consolidation. To me, it was like 35s to slightly higher. It could go. It's still in this broad consolidation. So that's the real issue right now inside this and this. It's not an issue to me. That's a discounted area right here, 26. Can it get bigger discounted? It sure can. But at the end of the day, this is consolidation, and this consolidation, I mean, well, it could even look like that. Eventually looks like that, but that's not till Q1, Q2. So this is all the setup into. It doesn't look bad. All right, so let you guys do a couple requests here. See where we are. Biddy, still wasn't like super impressed with the dip buy, but Bitcoin holds up a lot stronger typically. That could be it as well. I need to look at Hood also. So we'll take a look at the Hood ski. So Hood here, downtrend broken out. Now, hopefully this doesn't come back and pull all the way back. I'll tell you right now, this morning's low, I think is 117, is my level, right? And so 115 here, we have this kind of mountain range, and then lower we have this mountain range. So two general areas. So right now we are holding that prior support area. Look, so a couple things going on with Hood right now. First of all, November monthly metrics came out and they did not look the greatest. So Hood has been an insane company, insane growth for a long time. But this 1 month, which by the way, was a short month and was a crap month for the stock market, of course the metrics are going to be a little bit lower. Hello? Sorry. Expect that. And so whatever. Do I care? Not in the slightest. Not from a long-term perspective. I don't care. But what I do care about is like the longer trajectory. And what I will say is Hood is the greatest company on earth. Sorry, Palantirians. You can be runner-up. But right here, right now, is exactly the spot that I want to see. I want to see Hood recover. Now, tomorrow is a new day. It's a new dawn. Everything can change, right? But I don't. This is first decent buy spot here. If you're short calls, I don't know that you cover them right away. My God, Rivian is just exploding. I need to look at that next. Because if this doesn't hold, then like everything else, we're going to revisit these lows tomorrow. And while today is a nice spot, this is the day I want to see it hold, but I need to see it hold through the rest of this week. So just relax. This is a great spot for Hoodie. But I don't know, based on the market trend, if the market wants to pull back more, we might get bigger buys later. So what I will say is that it's 115s, give or take, and then potentially 100. But if that 100 fails, it would look like this. We would get if the 100 holds here, and then we get rejected at 115, that's where I would be really concerned. It's going to be a while till we have real clarity. I don't think that this is happening, but I'll just put it out there right now. The trajectory could be like another red day tomorrow, which is a bigger buy at the close. And then when we rebound, which we will, I need to see that rebound get over that 115 area, get over today's low if we go lower after today. So if it doesn't, that's when I'm going to be like, I'm not going to exit stage left on an exact like failure here, but My point is to expect some chop right in this area. But if we can hold, ideally, something like this, it's all gravy. It's all good in the hood. And we should be seeing 130s, high 130s, mid to high 130s very quickly. And this is that prevailing downtrend. Look. That's like 130s. So we can see 135, like boom, instantly again, which this becomes like an epic dip by the way, close to 110 maybe, but below 110, I think we're in danger. So the danger zone is here. I don't want to see below that. Below 110, or call it 106s, we're probably in more danger than we would like to think for a short period of time, because that could set up for a big, nasty dip buy in the 80s, which, again, I'm just putting out there. I love my hoodie. I don't care if this goes 80, but I want to have a lot of cash available to buy it if it gets there. Because it's not breaking out. It's still in consolidation. It's still tired, and we have big data coming this week. So that's hoodie for you. I got to look at my Rivi, because this thing is just going. I don't want this to go parabolic on me without me being in this for the ride. Now, I do have some leap spreads on this. Sorry, don't tell Chris I have leap spreads on this, but I have like 20, 27, $20, $30 call spreads that get me a bit higher, but this is it. Like this, it was 1880. And this morning, as I'm watching it, I'm like, OMG, we're holding 1880. I was expecting to get my head bashed in. We're not totally out of the weeds, but yeah, we're here. Friday's high. This purple line is the 200-week simple moving average, which doesn't come in 200-week simple moving average, which isn't something that we come in to contact with very often. It's an extremely strong SMA. But if hoodie can start trending over that, I mean, yeah, it's up and to the right. And the fact that we are day 2, 1, 2, I mean, I got to wait for tomorrow and see how this plays out. But this one is looking spicy, that 1880. And I don't know, if I want to give too much credence to the whole, like, okay, Rivian's going to have new chips and this, that, and the other, not so dependent on NVIDIA. But 1880 is the level to watch. If it's holding over that next week, yeah, this needs to size up for me. And we need to press, and this is going. This is like hoodie getting over that 13 level, or Palantir getting over that 13 level and starting to trend. You had some time, but if you kept waiting for that big pullback when that moment happened, it never came. And you just sat this whole ride out. So I don't really care where it goes, but as long as it's holding 1880, this is it's a big deal. All right. Let's look at some mega caps. So Amazon, I saw some requests for earlier. So here now, I like this level. 225, generally speaking, is, I'm guessing, where we are. Slightly lower. 223. This is a bit deeper of a pullback. It's right on it, huh? Slightly deeper. This is a very short-term perspective. Generally speaking, this can pull into 218s, but again, it's going to come down to your time horizon. I like this for a longer term position. I'm going to call this 217 a price of interest. Oops, sorry, not 217. 218.50. And that is, it's not a tradable thing, but it's a spot to look for a bounce. That's the low before the last low, which I think is fine. But look, if we're closing over 224 and a quarter, then we should instantly get this press over here. But it's 227 to know that if we're, as long as we're trending like a weekly close over 227, then yeah, we're good. We just hit our little head right on that 237 area. I think this is still consolidation. But probably just a wait and watch. Do nothing spot. I'm still long. I'm long calendar spreads. I'm not long naked calls. This is consolidation here. So I'm short January calls and I'm long March calls on Amazon, which I think is probably the way to be. And then if I wanted to add put spreads down there, like I actually probably could. So I could be short January puts and long March puts if we really go sideways for a while or just can't get out of our own way. That sets up for like a bigger chop before we go. But either way, honestly, this is the box that Amazon lives in. So just kind of, again, taper expectations. Not today. Wait for tomorrow's close to see what that high and the low print was. That's going to define the trend moving forward. Full stop. Tesla. If Tesla continues, I mean, when she goes, she doesn't really like to share the limelight. So this is the tops. This is where I was thinking Tesla's consolidation would be. Like here, resistance, and here, support. We have not tested that support area at all. So Tesla does Tesla, and she doesn't really move with the rest of the economics. Tesla does not move on fundamentals. She moves as a proxy to Elon and a proxy to FSD, etc. But when she goes, she just goes. So any pullback, this is about 460, and hold. This is good night. And let's just get this move measured here. 550s end a year. 530s end a year for Tessie. If this scenario right here happens. So pull back into 560 high, let's call it 570, and hold. Basically connect this high, connect that high. You'll have a little consolidation, and that's where we are, right? So like the broader consolidation has been broken. That's this. That's the consolidation I was looking at for Tesla. Here's your prevailing uptrend. It would just be up and to the right. Yeah, we'll see. We got to see. So tomorrow, if you get that pullback, and it's a strong pullback, meaning not very much, holds like 470. Yeah, this is Rivi 2.0, and I got to figure this out because she ain't gonna wait for me. She ain't gonna wait for me. Wait, Jason, let me let you get positioned. No. That's not how this works. She does me dirty sometimes if you wait too long. Yeah, this is, I mean, the more you look at it, like you're like, oh, okay. This has looked great like the whole time. Little breach, retest here. I mean, and now you're at the head and shoulders. The thing is that this is a head and shoulders, right? You guys see it, don't you? I don't know if you see it or not. So like left shoulder, head. This is where the right shoulder would have formed, which is why I'm like, I gotta wait. But like when you have this setup where like you have a outlier and it holds, this is the definition of a failed bearish pattern. This is like failed head and shoulders in its like prime. Tesla, primary culprit for failed bearish patterns, by the way, like very often. But this type of failed bearish pattern is like the most bullish setup that you can get because everybody including myself, was like braced, ready for this to go down one more time, hoping to get that 416 pullback. Either you were short or you weren't that long. And here and now you hold this level. What are you going to do? Well, you're going to pile right back in, and shoot, that's how we get there. Just like that. If you were short, you're going to cover. If you weren't long, you're going to get long. And that's a squeeze. So it's important that Tesla holds that 467 area. But that's the scenario. That's what we're looking at on Tessie. All right, I'm going to do a couple more. Rocket Lab. So Rocket Lab, I mean, I think this one you chill. So it's all about the SpaceX thing. When Tessie goes, she doesn't like to share the limelight. This one, amazing bounce, by the way. I still think the trajectory on this thing is up. Like, this is, I don't know if Maddie's around, but it technically speaking, this thing is begging for triple digits. So I guess the question is like, where's the pullback? And so again, attach, like connect the highs, the recent highs. Here's your box, your consolidation box, and you have what we consider fair value, or the market considers, not me. It's a technical definition. So your fair value is just that high 47. It's about 48, right? And so that area becomes your support. Right? That's your support. There's an entire range. So it's not like a hard line in the sand, but what we call this is called value area. So a value area high, value area low. This whole box is support. Support is not a line in the sand. And so like you could do this and then bounce. That's what support does. So I'll try to get this as specific as I can. And what I'm going to do is I'll just take a quick measurement from that more recent bottom, that glorious $38 dip buy. Boom, there it is, $51.38. I didn't see that coming, but that's a beautiful measurement that just showed up. I mean, guys, it's just wild. So, I mean, the $51.38 down to $48. So in this area, that was prior resistance, by the way, resistance over here. It's perfect. It's perfect. It's perfect. It's perfect. It's perfect. We want this prior resistance level that breached, right? Came in, breached again. I want this to act as support. It's not super complicated, but yeah, that's what we want to see. And if that's what that does, watch this. Now, if the price comes back down, right, what are you going to see on this little chart? Is there a little pattern? Anybody see? Like if my screen was literally just here to here, I mean, you're going to see it. It's going to be like low here. We're up and to the right, baby, which means that let's call it here. That next move, it's got to get through 56. Yeah, there's our 70s. And you're still in the triple digit range, because that at that point in time, so let's get a little bit more granular. I don't want to be I can't be super bullish all the time, but I'm a good bull. I'm a good bull, you guys. So I want to know where the bears are hiding out. Oddly enough, okay, this thing could be any minute. If it's right now, it's wild. It's not a great buy spot right now. This is a better buy spot, but hopefully you were long already at the lows. If it's over 61, she's just gone, holding. For right now, the second we lost 60, we should expect a 55 pullback. If we cannot hold 55, then we should expect that low, as close to $50 pullback as you can. That's what we should expect if we cannot hold 55. It sounds stupid because it's like obvious. Oh, 60, 55, 50. I mean, whatever. But that's what the numbers tell me. And if it does, it's a good day for charting, guys. This is good. Then so what I'm saying is, if it does, this entire thing becomes another consolidation box. And if you can break out of this consolidation, which will happen if you can hold comfortably over 62, doubling of that box, what's the number? That's a triple digit number. And that is why, right there, I look at rocketlab and say it wants to be a triple digit stock. But what has to happen is that this has to act as support. And then we have to hold over 60 moving forward after a big bounce. So I have to see a big bounce off support. Then I have to see it get back over 60 and hold. And then once I'm breaching 70s, well, we know what happens to stocks over 70. I mean, really, they go to 130. So triple digits. I don't know. Anyways, but that is the flow. That's the pathing that the stock would have to take for rocketlab to become a triple digit stock. And crazy enough, that timeline's not that long. The timeline is like late Q2. $30 billion. I'm looking, I got a couple requests for GLW. Corning. So this one had a big move. Again, wait on this one. It's not a growth stock. It's a growth company, but it's not trading in the growth sector. So it is a commodity type company. Not many people know about it, but 84s is, so first of all, you don't want to see this lose 86. You lose 86, you're going to drop a couple bucks. But this one yesterday has not recovered. Again, we're not really looking yet. Your NFP range on Corning is actually down here, I believe. So it's 84.77 is the first spot to watch. 84.77. And that's your fair value here. NBIS. The Neo Clouds. So you're at the lows again. I'm not going to text him in on this one. I texted him when it wasn't holding. So hopefully you guys got that. What we're doing here is we're taking this kind of consolidation range. You're breaching that. You have a little bit of a session gap here, 79. So that's your hold. But if you can't get that to hold, so it's 77.60. If you lose 77.60, you're going deeper. Definitely going deeper. If you lose 77.60. That bounce didn't even get there. Didn't even get to the spot that you're looking for. Actually didn't. Let's see. Not quite. It was a kind of a weak bounce. You needed to get over 106. But yeah, you have the Microsoft data center announcement for free here. The thing is that, like, I would just kind of taper the whole scenario, because, like, the thing is about this is that, like, okay, when you think about it from a business perspective, it's a business. The market needs to be excited about what they're going to do with the Microsoft money. It's not enough to know that the Microsoft money is coming, because if the Microsoft money is coming and they don't do anything good with it, they could just be getting the money and burning it. So if the market doesn't like where it's going, it's not going to like where it's going. But here now, this is the bounce spot. This is it. 77.60 should be a bounce. Period. End of story. Like right there. So that should be the lows. If it's not, it's as close to 60 as you can. So same thing. You can nibble here. We got a lot of data coming in the next 72 hours. So have cash available to continue. Because if it doesn't, well, then you're going near 60 in the next 72 hours. So just hang tight. We can check out another Neo Cloud. Yeah, this one just took it on the chin. Yeah, we're going to stay away from this bad boy. Probably the same with Cipher. Oh, yeah. We're staying away. We're going to play with one. We're going to play with Nebius. Otherwise, how about this for an idea? Long Nebius, short Iren. Is that wild? I don't know. Long Nebius, short Iren, and Cipher. For the crazy ones. You're hedged. You're hedged. Speaking of our Iren boys, can we look at MCD? This is McDonald's. Listen. Bullish. Like, that's bullish. I mean, I didn't buy any McDonald's this week. But this is the definition of that broadening, that rotation. McDonald's is lame, but the chart is just very clearly up and to the right. It has not gone anywhere since like the food poisoning situation, which if you don't know, that was a thing like a year or two ago, maybe 2 years ago. Over a year. So like if some stocks deserve like a breakout moment, look, you're going to 350. It's been like massive consolidation, but it's on its way to try to get to 350. That's where it's going. I could think others. J&J, oh my goodness, right? Like we've looked at this chart ad nauseum. Anyway, I just like, come on. You just may be looking in the wrong spot. This is a bullish market. This is bullish. Is it a little overheated today? For sure. Is this the day that you want to go out and buy? No. But look, you don't see these things happening. That's a big reversal. You don't see a reversal like this happening in an unhealthy market. What you do see this type of stuff happen in certain market cycles is a disinflation, not deflationary, is a disinflationary blip on the radar where money comes out of expensive, high multiple valuation companies, goes into very cheap, low multiple companies, and it all balances out. And eventually, yes, the high flyers, your NVIDIAs, Microsoft, whatever, Amazons, take a look at Meta, will come right back, rip roaring. By the way, Meta, super strong. And these guys will have their heyday. It's not that it's over. It's not. Don't be thinking like that. That's dumb. Sorry. It's just dumb. But eventually, after a while, look, growth is going to win. But not today. Not today. Although, Meta, I said that I would buy when I got the death cross, which is the 50-day crossing below the 200-day simple moving average. I bought. I absolutely bought. And I think that this is probably going to be the lows also. Because guess what? If this chart goes even slightly higher, I mean, just humor me. Let's say we get a couple days on Meta that are like this way, and you retest that 50-day SMA. Okay. What's going to happen on that 50-day? First of all, this 200 is going to continue to curve up. It's going to do this. And I'm going to get a golden cross right after my death cross. And I'm going to be like, dude, Okay. Does that happen? Okay, yeah, that's exactly what happens on Meta. You get a death cross, and then it's followed immediately by what? A golden cross. And this death cross moment, I mean, that's when the difference here right now is that the stock is over the 50 and the 200-day simple. That's an important difference, I will say. So I need to see the stock cross back over the 50-day to really lock this in. And if the price action of Meta is trading above the 50-day simple, oh yeah, we're gonna get a big one. Even when it's not, right? Here's price below, trading below the 200-day and all significant simple moving averages. Look, death cross here. You got a little bit of a pullback. I mean, nearly the lows. The thing is freaking up and to the right. and then you get a golden cross way higher. This is what, 230? The death cross happened at what? 165? Okay, timeout. The time between death cross and what is that, golden cross? 45%. Dumb. Simple moving averages were never intended to be used as crossover signals. Never. It was never the intention. Doesn't mean I want to go out and instantly like inverse them, no. But just saying, crossover signals come from stochastics, which not simple moving averages. This is 2022. We don't want that. I don't have a lot of them in between. Anyways, I think we're good for right now. So what's the moral of the story? The moral of the story today is to not rush out and have crazy, wild expectations. Moral of the story is patience and broadening markets. And overall, that is super healthy. I think the biggest pivot points coming for us this week are twofold. One comes tomorrow, and it's not about tomorrow's price action intraday. It's about Wednesday and Friday, how the market digests that. If I can get tomorrow's NFP and Thursday's CPI to align, okay, that's very likely going to be like 100% Q. That if tomorrow's NFP high and Thursday's CPI high are the same, and we can't get over that, look, we're probably going down. But if tomorrow's NFP low and Thursday's CPI low are the same, and we never and we don't come back to that like immediately and start trading below it, that is very likely the bottom. So those two scenarios. So we're looking for Tuesday and Thursday's price action. We're not going to react, not going to knee jerk nothing during those days, but I'm going to be watching the price. How does the market digest those two fundamental data points, and how does price react moving forward? And I mean, this is blending fundamentals and technicals, something that you're not supposed to do because trading is not complementary to investing. But the analogy is that, like, and if my editing team is watching, it's funny. The analogy between mixing technicals and fundamentals is like oil and vinegar. Do oil and vinegar mix? No, they don't. They can't stay mixed for very long. But when you can combine them in the right proportions, I mean, they make something pretty damn tasty. And that is what we do. And that is blending these two for the right amount of time to come up with the very specific end result that creates a beautiful outcome. And this is exactly what we're going to do this week. So great salad dressing. Sure. Yeah. But we're going to have this data point, and we're going to move on from there. But it's not about the days. It's not about intraday price action. It's about how everything digests moving forward. So it's not a big decision week, but it's a big tell for the market on where we're going to go next. But until then, adios, fam. Make sure you give the video a like, subscribe to us if you like what we gave you out today. We have more coming, and I think I will see you tomorrow on Technical Tuesday. But Till then, see you on the next one.